Hello and welcome to this Storyboard special. I'm Shibani Gharat. In a market destabilized by war in Ukraine, big tech troubles, rising interest rates, cost of living crisis and a new COVID variant, what will be the outlook for 2023? We're catching up with advertising executive Sir Martin Sorrell, who is currently executive chairman at S4 Capital and former CEO of WPP, to find out his predictions for the year and how will past year's woes and opportunities shape the advertising and media landscape. Sir Martin, welcome to Storyboard.
Welcome to 2023. 2022 was a pretty tough year for many people. Generally, it was okay for S4 despite some challenges. By the end of the year, I think we will have achieved our objectives. But 2023 is going to be an interesting year, as the Chinese might say.
Yes, interesting actually is the key operative word over here. So what according to you were the key events of the past year that will have a noteworthy impact on the year 2023, Sir Martin?
Well, I think, Giovanni, the world has changed, whether we like it or not. I don't know whether it's an era of deglobalization. The last 40 years have been one where free trade, reduction of trade barriers, has stimulated growth in GDP. And as you laid out in your introduction, the challenges that we have around inflation, around higher interest rates, potential recession, stagflation, the Ukrainian war, the issues around US-China relationships, long-term issues around Russia, Iran, those are just some of them, quite apart from North Korea, the Middle East generally, and other flashpoints. All these things are really are confusing to many people when you try and sort out what's happening in 2023. But I think basically the world is fragmenting now. India may benefit from that. I'll come on to that in a second. But generally, I think we're having to, those of us who are trying to run global companies or mini global companies, as I would put it, like S4, and its operating brand Media Monks, we're having to be far more selective geographically about where we operate. So I think India is increasingly seen, along with Vietnam and Indonesia, the Philippines, Malaysia as a whole, Southeast Asia, as an alternative to investment in China. And those clients that have major positions in China are obviously worried about the security issues if China was to move on Taiwan in any way, shape or form over the coming years. And those with big positions probably are moderating their positions and shifting. We've seen it with Apple and Foxconn making changes in terms of their supply chains. Europe, just turning to Europe, remains a challenged region. The war in Ukraine, which looks as though it's going to go on for a significant period of time, means that security issues override a lot of investment decisions or delay a lot of investment decisions. So I think that's the situation geographically. From a functional point of view, digital companies such as S4 are bound to benefit in 23 and beyond from a speed up in digital transformation. Clients are going to have pressure on their top lines because GDP growth globally is going to be lower in 23 and 2024. Maybe until the US presidential election, which may augur the beginnings of a different tempo in the real economy if a Republican administration is returned. Yeah. But until then, digital transformation and cost reduction are going to become very important. The Indian economy, in my view, will considerably outperform that. And I'm very bullish on the Indian economy in the longer run because I think it will benefit from the trends. It will become the most populous country on the planet. I think the Modi government is making significant changes to the industrial structure of India and the commercial structure of India, and that will play out to the benefit of the Indian economy over time.
So you are bullish on the India market, Sir Martin. In fact, a couple of weeks ago, I had a conversation with Mark Reed, WPP's Mark Reed, and he said that he won't be surprised if India overtakes the UK market for WPP in the coming days. What is your say on that?
Well, I think that's pretty obvious, isn't it? Because if you look at, I don't know whether he's referring to WPP's business
To
in India,
WPP, to WPP's business in India vis-a-vis UK's business.
or whether he's referring to the general industry. I think he referred to either. The Indian economy, as I said, will become the most populous on the planet in fairly short order, bigger than the Chinese economy. China will be the number one economy by size in time, not on a per capita basis. That will take a very long time to be the case. But the pecking order by 2050, the top 5 economies in the world will be around the US and China leading and US second. A lot of people believe that India will be the third largest economy by then. The fourth largest, I've seen predictions that Indonesia will be the fourth largest economy by 2050, followed by Germany. So we'll have to see how it plays out. But what that tells you is that Asia Pacific is becoming more and more important.
So, Martin, let's move over to the global markets from India. Of course, as you mentioned earlier, you were bullish on the India market, and India is going to be a key market for several businesses in the coming days. But globally, what are the key trends, key consumer trends that you or your clients are witnessing?
Well, I think our clients are very, very focused on performance and sales. With the decline in GDP, as I said, from about 2 to 3% this year, 2022, to about 1.5 to 2% for 23, and maybe the same or a little bit more in 2024. So certainly lower levels of growth than we've been used to for the last 40 years, which have averaged well over 3%. As they face that economic climate, they're going to be very focused on performance and on activation. So what we've already seen in the tail end of 22 and going into 23 is a movement of what we call in our industry down the funnel, maybe a little bit confusing, but what it means is that clients are becoming very much more sales orientated. Return on investment, our clients will be very focused on that, on media measurement, understanding, Giovanni, what the relative merits of analog media are and what the relative merits of digital media in comparison. So getting their mix of media right in a 23 or 24 context is going to become really increasingly important. And that mirrors what's happening at the consumer level. I mean, consumers, obviously, there's been a lot of revenge spending in travel, entertainment experiences after COVID, and people have been thirsting for contact and experience and travel and entertainment and engagement after COVID. But having said that, there are concerns about value and there are concerns about pricing. A lot of our clients, for example, during the COVID period or in the last year, as inflation has started to take hold in most developed economies, 7-10% double-digit inflation in some, they've been pricing up. And I think clients are becoming increasingly concerned that consumers are becoming more and more sensitive to price increases. So getting the balance right between price and volume is going to be increasingly important.
So, Martin, now let's move over and speak about the future of big tech. After 2 years of high, it was not such a great year for the big tech companies, 2022. So how does the future look like? How does 2023 look like for big tech?
Well, what's interesting, Giovanni, is when you actually look at 2022 and you look at the big platforms. When I talk about the big platforms, I'm talking about the top 6 or so. So Alphabet, Google, Meta, Amazon, Alibaba, Tencent, and ByteDance, TikTok, which are the 6 major ones. You can look at Pinterest, you can look at Snap, you can look at Twitter as well. But when you look at the big platforms, overall in 2022, they're probably going to grow by about 10%, a little bit under 10%. Now, what's interesting about the prognostications for next year is although the industry, and you referred to one of the holding companies just before, the holding companies are looking at the industry growing about, the advertising industry growing about 5 or 6% next year, with digital up about towards 10%, almost double digits, and linear or analog flat. So again, next year, although the headlines, as you quite rightly say, have been particularly focused on some of the big tech companies, such as Meta. I mean, Meta, I think unfairly, has been put at the root of all problems. All social problems are down to problems on social media, and all social media problems have been around Meta. People have overstressed the stress that big tech have been under. And I think next year, with that emphasis that I've already outlined on activation and performance, platforms such as Google and Amazon, which this year Google will probably grow by about 10 or 15%, and Amazon will be up, its advertising platform will be up by almost 30% this year. They will continue to grow next year, and you'll see a recovery in Meta. So I think rumors of the death of the digital platforms are overestimated, to say the least, and you'll see a strong recovery of the growth rates, which again, just to emphasize, those growth rates have declined, but they've still been pretty strong in 2022, and they look as though they will be pretty strong in 2023.
The larger problem which many experts were pointing out when it comes to big tech was over-ambitious hiring, and then probably a need to relook at the business models. So do you think that stands corrected?
Yeah, we ourselves suffered from that in the first half of the year, when our headcount increase, number of people in our business, was growing in excess of our revenue increase. Our revenues to the end of the third quarter of last year, you'll see our final results shortly, to the end of the third quarter, we're up by 28% and 29% in the third quarter, but we've been increasing our headcount. And the same thing, obviously on a much bigger scale, was true of some of the tech companies. They were hiring too fast, or maybe they were hiring too fast in anticipation of greater growth. Those growth rates have come down. Alphabet have reduced their hiring rates. Microsoft have, Apple have, Amazon have cut their headcounts. Meta have cut their headcounts. Netflix have cut their headcounts, as they were probably, as you say, over-ambitious. But again, I come back to the fundamentals. They're rebalanced. Now, you said, did they change their business model? I'm not sure that they've changed the business model. I think they've just altered the pace of hiring. What we saw in COVID was a rapid acceleration in digital transformation and acceptance at the consumer level, at the enterprise level, at the government level. I mean, we embraced digital communication as we were stuck at home in the COVID lockdowns, and that accelerated the pace of growth and probably concertinaed the growth in the COVID period of 20 and 21, maybe into 2022, but in a very sort of concentrated period. And what's happening now is there's being a readjustment, not I think of the business model, as you asked me, but really of the balance between hiring and growth. And in a way, S4 Capital or Media Monks, its operating brand, was a reflection of those trends too. So I think the pace of hiring has come down. And one of the big issues that all digital businesses faced in 22 and will face again in 23 is the rise of the cost of digital labor. That is ameliorated for the reasons that you just touched on. As the pace of hiring has come down by the digital or tech giants, so the pressure on wage increases in the digital economy has been lessened too.
Now, moving on to new business pipelines, how does 2023 look like from the new business pipeline perspective?
Well, it's very interesting that none of the holding companies, for example, were at the Morgan Stanley conference in Barcelona in November. That's traditionally where the CEOs of the holding companies appear and give their views on what 23 might look like. But none of them showed up. And I think that indicates their shyness about making any forecasts for 23, because I think they are somewhat nervous with their analog profiles about making prognostications. Most of the analyst forecasts are forecasting that the holding companies will be flat to down next year in terms of revenues. We've just, in the process of completing our budgets, we haven't given any guidance for next year, but what we have said is the industries in which we operate, that is, the digital platforms, are going to grow next year by somewhere between 5 to 10%. And the transformation industry, in which 10% of our revenues operate, going to grow by 15 to 20%.
Thank you so much. Thanks for joining us today and sharing your insights.
Thank you.